special Bhavcopy segment where he talks about stocks that have been buzzing around in trade. Today he talks about a stock that is up close to around 140% since April this year. Mangalam, take it away.
Indeed, Nigel. So the stock that on my Bhavcopy list today is Asian Oilfield Services. Small company, market cap of 230 crores. But take a look at the moves that the stock has shown. 35% since November 25 and almost 140% since April. In fact, the stock has doubled since June itself. Now, a little about the company. What the company does is it is engaged in geophysical drilling as well as well services across the Indian subcontinent. What it basically does is it serves the oil and gas industry and the mining industry for seismic data and topographic surveys, which is similar to what something like an Alpha Geo or Deep Industries would be doing. Not exactly the same thing, but on similar lines. But then again, take a look at the revenues of the company. Over the last 4 quarters, the revenues have been abysmal: 12 crores, 6.6 crores, in fact 3.1 crore in the last quarter. And take a look at the EBITDA. This is EBITDA loss, mind you, not EBITDA gain. So it's a negative 12 crores, 3.4 crores, 16 crore EBITDA loss in the last quarter. And even annual trends are as abysmal. Take a look at the revenue growth, or rather degrowth, in the company. And over the last 3 years, the company has posted a net loss. So what explains this kind of move in the stock price? Well, here's a timeline of the events. The debt of the company has been increasing, so that is a red flag too. But the long-term debt has been decreasing. The increase in debt is primarily on account of short-term debt. Now, this is what the timeline indicates. Perhaps that could explain the move. On Jan 2016, the company became the first company in India to successfully implement wireless real-time seismic technology. So it has been ahead in the technology curve. Then, in May 2016, the promoter Samara Capital agreed to sell stake to another company called Oilmax Energy at 24 rupees per share. Now, what basically this means is Samara Capital has been a group of investors. It has sold to someone which is Oilmax Energy, which is someone in the business. So in August, the Samara Capital was classified as promoters with a 56% stake, and as they were classified as promoters in August, in September itself, the company won orders worth 51 crores coming in from Myanmar. And why this is important? Because this is the first order win that the company showed in the last 1 year. The previous order win came in September 29, 2014. In fact, after that, the companies started to win a lot of orders. On November, the company won 140 crore rupees worth order coming in from Oil India itself. Not just that, additionally, what has happened is that on November 26, the reason why I took the stock move from November 25 close is because on November 26 there was an announcement to the exchanges that the company will issue 1.45 crore shares to the promoters at more than double the price at what they initially entered or agreed to buy this stake. So that could be a positive sign, because if you look at it, the promoters' shareholding, currently the promoters hold 1.25 crore shares in the company. This is Oilmax Energy that I'm talking about. Additionally, after the board meeting, the company will get 1.45 crore shares worth warrants. And once this happens, post-conversion, the promoter stake can go from 56.3% to 73.5%. So promoters buying more than double the shares at more than double the price and getting orders after they were classified as a promoter could be the key trigger for the company. So moving on to the triggers of the company, they have orders worth 190 crores in hand. So last year the revenue was 78 crores. So they have revenue visibility going forward. The promoters increasing stake, like I said, is a positive trigger. And as I spoke about the company's business, increasing oil price outlook is also a trigger for them. That said, it comes with a lot of risks. The first one, the company has made EBITDA loss even at 141 crore revenue in FY15. So we need to see whether the company is operationally doing well. Execution of those 190 crore rupees worth orders are important. And finally, the company has increased its debt, whether it's short term or long term, it is a negative. And they don't have any proven profitability track record. Yes, the promoters have changed. All the points are pointing towards the right direction, but we really need to see on-ground performance of the company to see the stock price rising further.
Okay, thank you so much for that exhaustive analysis of Asian Oilfield Services.